Welcome to our video on how changes in government policies impact the UK stock market. Government policies play a crucial role in shaping the business environment and economic conditions within a country. As an investor, it's important to understand how changes in government policies can influence the UK stock market. In this guide, we'll explore the various ways government policies can impact stock market performance. Let's dive in. Fiscal policy. Fiscal policy refers to the government's use of taxation and public spending to influence the economy. Changes in fiscal policy can have a significant impact on the stock market. For example, taxation policies, increases or decreases in corporate taxes or capital gains taxes can directly affect the profitability of companies and investor returns, influencing stock prices. Government spending. Changes in government spending priorities, such as infrastructure projects or subsidies for specific industries, can impact the performance of companies within those sectors. Increased government spending can stimulate economic activity and potentially benefit related stocks. Monetary policy. Monetary policy involves the management of interest rates and the money supply by the central bank. Changes in monetary policy can affect the UK stock market in the following ways. Interest rates. When the central bank raises interest rates, borrowing costs for businesses and consumers tend to increase. Higher interest rates can impact corporate profitability, consumer spending, and borrowing for investment purposes, potentially leading to a decline in stock prices. Quantitative easing, K. Central banks sometimes implement K programs, which involve buying government bonds or other securities. K injects liquidity into the economy, potentially leading to increased stock market liquidity, lower borrowing costs, and improved investor sentiment. Regulatory policies. Changes in regulatory policies can have a profound impact on specific industries or sectors within the UK stock market. Government regulations can influence company operations, market dynamics, and investor sentiment. Examples include environmental regulations. Policies related to climate change, emissions, or renewable energy can significantly impact companies operating in the energy or manufacturing sectors. Stricter regulations may require companies to adapt their operations, potentially affecting profitability and stock prices. Sector-specific regulations. Certain industries, such as healthcare, financial services, or technology, are subject to specific regulations. Changes in regulations can affect business models, market competition, and investor perceptions of the industry, ultimately impacting stock prices. Political stability and uncertainty. Changes in government policies, especially during political transitions or elections, can introduce uncertainty into the stock market. Investors may react to the uncertainty by reducing their exposure to UK stocks, leading to increased volatility and potentially lower stock prices. Conversely, political stability and clear policy direction can boost investor confidence and support stock market performance. Trade and international relations. Government policies related to trade agreements, tariffs, or international relations can have a significant impact on certain industries within the UK stock market. Changes in trade policies can affect exports, imports, and global supply chains, potentially influencing the performance of companies operating in those sectors. Infrastructure spending. Government policies focused on infrastructure development and public investments can benefit companies in construction, engineering, or transportation sectors. Increased infrastructure spending can create new business opportunities, boost economic activity, and potentially lead to higher stock prices for companies involved in related projects. Conclusion. Changes in government policies have a notable impact on the UK stock market. Fiscal policies, monetary policies, regulatory policies, political stability, trade relations, and infrastructure spending all play a role in shaping market conditions and investor sentiment. As an investor, it's important to stay informed about policy changes and understand how they may affect different industries and companies within the UK stock market.